Aloha, YouTube investors. How is everybody doing today? My name is David Yansen. Welcome to my channel. Today is October 19th. It is Monday, 2020, and it is earnings season. So in this video and pretty much all my videos for the rest of the week through the month, probably all the way through December, I will be doing videos on the holdings that I own that announce their earnings. So in this video, we'll be talking about IBM. But this is my Fidelity account, and IBM is in my Fidelity account. I have two other brokerages that I use. My Roth IRA sets in M1 Finance. My Robinhood portfolio is a growth portfolio, and then I have this individual dividend growth portfolio with Fidelity. So, and I do have videos if you want to see the playlist of all these accounts. Also, my dividend tracker that I do at the end of every single week. That video shows you how much money I will be paid by the end of 2020 in dividends, and then it shows you an estimated projection all the way 25 years out to 2044. So I do that at the end of every single week after I've made my buys and sells, and then I adjust the dividend tracker to show you exactly how much I'm getting paid every single year with each of my holdings. So as it stands right now, I'm at about 50 holdings, I think, probably 49 now. I did sell out of Aflac this morning, and I'll tell you why I did that here in just a second. And then we'll go into IBM's earnings right after I show you the portfolio for the day. So these are my holdings that I have with Fidelity. You can see for the day things ended in the red, 1.43%. All time I'm still up 2.7%. And like I mentioned in my previous videos, I've only been doing this for about 15 months. This is my first recession as an investor, not my first recession ever. I think my first recession ever was the oil shortages or the gasoline shortages back in the 70s. I think I was like 3 years old or so. We were living on the East Coast. Now I live in Hawaii. I'm almost 45 years old, but I was born in New Jersey on the East Coast. And so my dad was laid off then. And then another Black Friday. That wasn't really a major recession, I guess, but it was, you know, Black Friday happened, I think it was 33 years ago today, 1987. I don't know exactly how many years ago, but I think it was today. It was Black Friday. It's kind of strange seeing how the U.S. stock market really sold off today. The Dow, the NASDAQ, and the S&P 500 all ended in the red, ended in the red today. So. And then a couple other recessions, George Bush Sr., 1999-2000, tech bubble burst, and then the Great Financial Recession. I was out of college about 7-8 years or so when that happened, and I lost my job. So anyway, you can see on my different holdings here, I did sell out of Aflac. The reason why I sold out of Aflac is because I wanted to put that money into Abbvie, and seeing how I have been doing this for 15 months, I'm feeling better about my stock picking now, where before Aflac was like, okay, this is a solid dividend company, they have a very strong dividend, they're mainly catering, you know, this additional insurance to, I mean, you've seen the commercials with the duck in Japan and in the US, and with this additional supplemental insurance. And so I had 3 shares with them, but I thought, you know what, this around noon East Coast time and around 9 a.m. or 8 a.m. somewhere around there, Hawaii Standard Time here, I noticed that this sell-off was going. So I was like, oh, if Abbvie falls down some more, I'm going to add some more shares to it. So when I saw Abbvie start to tank a little bit, I jumped in and I sold out of Aflac. I took that little over $100. I think I actually just took $100 of it because I did have a little bit of cash sitting here in my account already. And I added that to Abbvie, and then I took the rest of the money that I had in my cash and I put that to Abbvie as well too. So my cost basis over $88, and I have 7.8 shares, and they closed out at $84.31. So I am down with Abbvie, which you never like to see, but like I said in my other videos through the month of September, when the stock market dips, stocks are on sale, so it's a great time to go in and start picking up some additional shares if you can afford it. So, but now let's look at IBM. IBM finished the day not strong in the red like a lot of companies did today, and a lot of my other holdings. I own I have 3 shares of them, and the reason why I first bought into IBM was, again, I really didn't know what I was doing, so I was just kind of grabbing companies that I had heard of, that I'd ever seen, that I had possibly seen their commercials. I wasn't really sure about reading dividend yields and revenue growth and stuff like that, but because IBM, the Big Blue, they've been around forever, I just figured, they're more solid. Later on, I started to realize and notice that they had been declining revenues for 5 or 6 years or so now. But I still think that they have a good thing going. They have Red Hat, which they acquired, $38 billion, it's a lot. But that part of their business is, the Red Hat is for their hybrid cloud solutions, which basically takes your older infrastructure and meshes it to the newer infrastructure to make sure that all your data and everything is backed up for the age that we're in right now. App services, and they have clients, hospitals and stuff like that. US Open is one of their clients as well too. Live time information about what's going on in a tennis match. I don't watch tennis. Every now and then I'll see something on ESPN about a tennis match. I've heard about some of the famous tennis players, but it's not a sport that I've ever followed. Their Red Hat is what they're hanging their, no pun intended, hat on, is their cloud services. So they are spinning off their old school infrastructure IT business to be another company, and then they're kind of going all in with the cloud services side and Watson and AI and everything like that. And you've probably seen the commercials, IBM Watson. I think they're working with ESPN for fantasy football. I'm not sure. I see so many commercials nowadays. And I take note because sometimes I own a position with that company, but there's a lot of the big boys that I own. So anyway, their earnings, or Q3 adjusted earnings per share was $2.58, which was basically matching what Wall Street consensus was. Their revenue for the quarter ended September 30 was $17.5 billion. Which was down from $18 billion for the same quarter in the prior year. So, and I'm kind of giving estimates. There's always like 18.0 something billion. So basically, about $18 billion was what they brought in the same time last year. Of course, this is a very tough year for everybody, so it's not so much of a surprise that companies' revenue isn't as good as it was previously, with the exception of your Amazons, your Netflix, your stay-at-home economy companies. Me personally, I'm thinking everybody's moving to cloud storage and to data storage. How come they're losing revenue? But I think it's mainly because this is their total revenue that it's mainly off of, because of their older legacy type businesses that's kind of dragging it down, because their cloud service revenue actually was up 19%, $6 billion. And this current CEO, which I don't believe I can say his name right. No, I can't say his name right. I was practicing saying it all day today, and I've practiced saying it since I heard he was put in as CEO. He was actually in charge. Arvind Krishna, maybe? Arvind Krishna? Not sure. So anyway, he was previously in charge of the cloud businesses, and because the company has just been struggling, they thought, okay, our cloud services side is actually doing really well. So this other CEO is going to leave, and we're going to bump up this guy to chief executive officer. So on the good side, the cloud services was very good with them. In the third quarter, brought in $6 billion. That's a lot of money just for 3 months. The total revenue, like I said, did fall over 2.5% to $17.56 billion. And they did beat estimates. Their estimates for total revenue was, I think, $17.5 billion, like $17.54 billion, and they brought in like $17.56. So they did beat a little bit, but overall the company is still struggling. So for me, this is kind of a risky play. It is a dividend play as well too, as their dividend yield, if you're not familiar with IBM, is pretty high. I don't know how long they will be able to maintain it at that high, at that levels. Right now, I read that I think they have 16 billion in cash, which is a lot, and that they were saying that they were going to use some of that to pay down some of their debt that is coming up. So that is good news. So I guess as long as they're managing their debt, I'm going to hold on to them, even if the yield does drop a little bit. So that would be, if they suspended it or cut it, then, you know, I'm probably going to have to get rid of them, just because I prefer to hold on to companies that increase their dividend payments every single year. But with them kind of staggering with revenue growth over the last 5 years and doing this major adoption, which could end up being a huge thing for them in the future, they're still kind of behind Amazon, Microsoft, and Google as it comes to cloud and data storage and stuff like that. So they kind of have a decent uphill battle to go with when they are considering they're facing Amazon, Microsoft, and Google. So anyway, I will have my other videos for you as well later on this week. Tesla, Verizon, out of my Fidelity are reporting, as well as Intel, and then out of Robinhood I mentioned Amazon, Facebook, and Sirius XM Radio, which was my free stock from Robinhood. I will be reporting on them. And then M1 Finance, I have Procter & Gamble and a couple other companies I can't remember off the top of my head. So stay tuned for those videos. I hope you have a great day. Mahalo and aloha, everybody.